All right. Well, thank you everybody for attending. Today we're gonna run for about 30 minutes, maybe a little bit longer. I'm gonna discuss semi-passive franchise models. We work a lot with people in the medical field. We work with a lot of people in tech that want to diversify their portfolio, and they're looking at possibly owning a franchise as a potential asset to include in their portfolio. And so most people that are doing fairly well in their corporate world, they probably don't want to give up that career right this minute, and they're looking for additional cash flow, or they're looking for some tax strategy. You know, if you're an employee, you're usually taxed at the kind of the highest tax rate. So the tax code was really written for small business owners. There's a lot of advantages to potentially offset some of your W-2 or your earned income by owning a small business. There's a lot of different business models out there. And today we're really going to focus on what we call the semi-absentee, which is similar to a semi-passive model, where really you work on the business, not in the business. You usually typically have a general manager that runs the day-to-day. I mean, this is a business. It's a lot more moving parts than per se a piece of real estate that you buy and you put a property management, right? That's really passive. A business, there's a lot more moving pieces, there's a lot more moving parts, but I also think it has a lot more upside to get. And also, if you're not a real estate professional, and I'm not a CPA or tax attorney, but there are a lot better tax benefits too for owning small businesses. So a semi-absentee franchise really allows you to earn passive or semi-passive income while maintaining your medical career. There's different business models. We're going to dive into some business models in different sectors. So there's a lot of non-brick and mortar franchise systems where there's no brick and mortar. You can run the business from your home, from your laptop, from anywhere. There's some other business models where you do need some warehouse space. We're going to talk about the emerging sectors, whether it's home service franchise models, the boring businesses like HVAC companies, painting companies, businesses that you're not going to actually pick up a paintbrush to do, but they're out there. Many corporate people, attorneys, tech workers, medical professionals own home service franchises. We also have a lot of health and wellness franchises that would be possibly a good fit for you. How we work is it's unique to you, meaning everybody has a little bit different story, what they're looking to do. Some people are looking to transition out of their corporate job. Some people want to stay in. So really, we custom tailor our search, and it's also based on where you reside. So we have to do territory checks. We actually have if you're familiar with a DISC assessment, we use something similar that was created for business. We call it a business assessment. And so we actually have you take the business assessment because we use a kind of a scientific approach to matching you with the right business model. There's not one size fits all because it's based on a lot of factors. Like if you want to grow and scale the business, are you looking just for one territory? Are you looking for supplement? Are you looking for a business that's really just good that has a lot of trucks and machinery you're going to buy, and you can utilize Section 179 and bonus depreciation to offset some of your earned income? So there's a lot of different reasons why you'd want to own a business, and it's different for different use cases. A lot of people in the medical field, they're a natural fit for home care, right? There's 11,200 people turning 65 a day. People want to stay at home, so senior home care is a big franchise model that's doing very well. A lot of people with medical backgrounds. We do a lot in the med spa, health and wellness space, where there's some really good business models where generally you need a very low employee count. Because at the end of the day, you really want to think about what's the pain factor of this business? What am I going to have to do? What are the variables that could go wrong with the business if I lose the general manager? So that's really kind of what we dive into once we know kind of what your end goals are going to be. So really, we're not going to get too specific today. My goal for you there today is just to get a good overview of what's available, and if you're interested, next steps on how to like really pinpoint and go through the process to figure out what franchise business model might be the best model for you. You can also look at, as you get going, there's people that own multiple franchise brands. So I have clients that own painting companies, HVAC companies, because they pair well together. So you can look at things as you grow. You can look at owning multiple territories. With the home service business models, for example, a lot of them are similar in the fact that the way you grow them is you get another truck and you get another technician, and that's how you scale these businesses. So let's just say it was a handyman service, and you knew that the average ticket price when a handyman went out to do a service call was $471. Then it's how many service calls a day could that tech do, and then at what point you get truck two and tech two and so forth. And that's how you grow and scale home service franchise models. Now, the other models are a little different, but I'm just trying to give you an overview of what to expect. But essentially, semi-absentee franchising, it's going to give you flexibility. It's going to give you some work-life balance. It's going to give you some legacy to pass down to maybe have some children. And then it's also a sellable asset. So as this business generates more income and net profits, down the road you can sell it and get a multiple of your earnings. And that's very common. There's a lot of private equity companies that come in and buy these home service type business models and so forth. So there is an exit for you too with this business. So there's cash flow, there's tax benefits, and then there is also an exit down the road if that's what you want. And some people get into this business because they have children, and some people want something really simple. So we have vending businesses. We have something pretty much for anybody in the world of franchising and business opportunities. So that's what's exciting about this field. The process for this really is, if you're interested, I know we haven't got the meat and potatoes yet, but I'm just giving you the lay of the land. It's typically the way we work is we would book a discovery call. We'd have you take the entrepreneur assessment. We do a business model presentation for you based on your specific location, because we have to do territory checks and all that good stuff. Typically on phase one, after we do the initial legwork, we're going to introduce you to 7 or 8 different franchise models. And then you get to phase two, and phase two is the discovery process that you would actually undergo with the franchisor. So usually the way we like to position this is that out of that 7 or 8 franchises, we like for you to talk to 3 of them. And you're not obligated to do anything. There's no fees involved. It's really just, at the end of the day, I tell people the same thing. If you're looking for an opportunity, go through our process, try it out. It's not going to cost you a dime. And at the end of it, you can decide that business ownership might not be the right fit, or a franchise might not be the right fit, or in a perfect world, you realize that you found a great match and you get into business with this particular franchise brand. But once you get introduced to these 2 or 3 franchise concepts, they're going to take you through a process. They're going to do a franchise discovery call. That's just initial 45-minute overview where they deep dive. On phase one, we're going to give you a high-level overview of the franchise concepts. On phase two, the business development person for the franchise is actually going to do a very deep dive on the business model. And then if it's intriguing to you, the next call would be a FDD delivery and review. And the FDD is what's called a franchise disclosure document. Franchise disclosure document is between a 250 to 400 page document, and there's 23 items in there. And these are the numbers. So franchises are overseen by the FTC, the Federal Trade Commission. So there's certain disclosure laws that are required, just like if you were to invest in a real estate syndication or some sort of syndication, there's disclosures for franchises. So inside the FDD, you're going to learn about their item 19, which is their financials. You're going to see if they own any other businesses, if there's any lawsuits. Really, and during this time, we also have a checklist to help you understand the FDD. We also have a 45-minute video from one of the franchise attorneys we work with, kind of giving you some high-level points to understand the FDD at a higher level. From the FDD, the franchise disclosure document and review, the next step would be you would do a territory and unit economic call. And that's really where they go over, well, here's your territory. This is how we gauge your territories. This is, how many people are in the territory, how many households, whatever the demographics they're looking at based on the franchise model. And then everything's going well. The next step is what we call validation calls. And now this is a very important factor, because validation is where you call other franchisees in the system and you're asking a lot of questions. We also give you some resources for this as well. So this would be questions that might not be disclosed in the FDD. And this is where you really want to hone in and find out the good, bad, and ugly with the franchise concept. And so we have checklists and resources for that as well. Excuse me for a second. Everything's going well. Validation calls are checking out. Then you go into the discovery day. Now, the discovery day is you're at the point where you have your funding lined up. You're pretty sure this is what you want to do. At this time, the franchisor is going to invite you. This is assuming that they like you and you like them and everything checks out. They're going to invite you to discovery day. This is where you fly to their corporate office. You might do a ride along or go to one of the retail locations, depending on what type of franchise. You're going to meet the leadership team. And at that time, they're going to make a decision and you're going to make a decision. Pretty much they're going to say, hey, we'd like to award you this franchise. And at that time, they're usually the expectations are either you're going to move forward and or you decide that it's not a right fit at that time. But that's like the very end of the process. Prior to this process or just around the same time, because this is about when you're ready, you're pretty much, hey, I think I've done all my research. I really like this brand. I'm going to do this. If I get awarded to it, I'm pretty sure I'm going to sign the franchise agreement. Prior to signing the franchise agreement, we always encourage you to do have an attorney review the franchise agreement and a FDD, just for peace of mind. And so not everybody does it. As consultants, we advise everybody to do it. We have resources for that. We have resources for CPAs to figure out what type of business entities. We work with Michael and his firm, and that can help you figure out what entity structure, any taxation questions, and potentially how to. You can also, there's something called a Rob's rollover. So some people use some of their retirement account and roll over. You can do what's called a Rob's rollover with an old 401k if it's pre-tax. So some people do that. So that's where you're going to get some technical questions. Prior to all this, though, you're going to know your funding options. Some people write a check off of a HELOC. Some people have money in the bank. And a lot of people use SBA financing. So on SBA financing, we can fund between 80 to 90% of the total project costs. And that would include franchise fee, working capital, build out of the location. And so SBA is a really amazing tool for franchising. It's high leverage. You're not going to get leverage like that anywhere else. The SBA doesn't make the loans. They guarantee a portion of the loan. So a very good tool. On some of the smaller ticket franchises, we're able to finance up to 90% of the total project cost. So for example, I had a gentleman who wanted to be an owner-operator, and he was investing in a franchise painting company. It was a startup franchise, and the total costs were about $100,000. So we were able to finance 90% of that. So he only had to come in with 10 grand to close. And we built in that 100 grand, we built the franchise fee, working capital, employee salary for the first couple months. If there's a brick and mortar location, we could build in the first few months of lease. So it's really an inclusive program, and we are very fortunate. A lot of other countries don't have this program, and like in Canada, for example, they're always, they see our SBA program and they're really wishing they had something like that. It's a great program. You can excuse me. You can also do business acquisitions with this type of loan. You can, if you own a business right now, you can actually do a rent replacement deal where you went and let's say you were leasing your building, you went and bought a building. As long as you're going to occupy at least 51% of the space, you can use SBA financing. Potentially on that type of deal, you can get up to 100% financing. So it's got a lot of very good use cases for it. So just covering this again, we have like 20 different sectors: home service, health and wellness, child education, medical services, advertising, business to business, coaching franchise models. I mean, literally over 3,000. And now, granted, we don't work with 3,000 typically, but we do work with usually a good 20 to 30 are the kind of reoccurring themes that we see. But sometimes there's certain circumstances where we do some outside the box research because somebody's interested in a certain sector, and we bring in new franchise models all the time that way. We have food service businesses, smoothie shops, gyms, saunas, all that kind of stuff and more. So, touching on tax benefits for medical professionals, actually, it's just tax benefits in general for small business owners. Section 179 is something you'd want to research if you're not familiar with it. Um, and I'm not a CPA or a tax attorney. You're always going to want to consult an expert. But let's just say you bought $100,000 of vending machines. Potentially, you could write off the full investment. Potentially, you can offset some of your W-2 taxation that way. So a lot of people start to understand the power of just the tax benefit alone of this. There's also bonus depreciation, so that they can look, and your CPA is going to tell you on how they're going to structure it from a taxation standpoint. So really being able to, I work with a lot of people that are in tech and medical, and I see their earnings, and it's crazy because they're paying a bunch of money in taxes. And if they just learn these strategies, not only can they create more cash flow from this business, not only can they create tax advantages, they're also building a sellable asset. So there's a lot of benefits of owning a business at the end of the day. I'm actually in the works of writing a book, and it's basically why everybody should own a business. Even if you want to keep your corporate job or you already own a business, there may be advantages to own multiple businesses. But everybody should, in my opinion, own some sort of business, whether it's a very passive business like vending, where it's very semi-passive. You really should look at your situation and see where you want to improve. Some people don't have an income problem; they have a tax problem. Some people, they're doing okay. They're making six figures, but they live in a high cost area, and they really want to try to get out of the rat race. So owning a business that is semi-absentee could be very ideal for them in that situation. So business models for semi-absentee franchising. There's the owner-operator model. That's really for somebody that's going to be work in the business. Maybe they're going to run the HVAC company. They're going to be like general manager. The semi-absentee model for an HVAC company is really you're hiring the face of the company. There's multi-unit ownership. That's when you own multiple locations. There's also master franchising, where you become the master franchise of a certain franchise brand, and then you actually bring in other franchisees in the system and make fees off of them when they make investments, and you get a portion of the royalties. So there's lots of different models. It just depends on how ambitious you are and your goals. Some people are happy where they're at, and they're just looking for a side hustle type business. Some people want to grow and build an empire. It really just depends on you. There's no right or wrong. It's really up to you what you want to do. Really, when it comes down to it, I don't want to pull any punches. Owning a business, it takes work. No matter how semi-absentee it is, you have to be a good leader. You have to learn how to hire and fire and retain employees. And really, this is the kind of discussions we have if you decide to work with our group, where we really kind of hone in and just talk to you like, what are your goals? What do you really want? Like, are you okay leading a team? Are you more introverted and really don't want a business that's sales? The business models I think are preferable in this semi-passive world would be a business model that has recurring revenue. So what business models? For example, really you hear this term now, boring businesses. Boring business is like owning a pool route, right? You're not the one cleaning the pools, but that's recurring revenue. Landscape businesses, recurring revenue. Even HVAC companies, they have service packages where that's recurring revenue. Pest control companies, recurring revenue. We work with a med spa type of business, and they have membership. And so they have members paying $179 to $210 a month. And so that's pretty sticky. So what type of business model makes the most sense? I get a lot of comfort out of knowing that if I get X amount of members at this price, it covers my overhead. When I grow it to this is where my profit margins will be. So when you're looking at the different franchise models, I would consider all these factors about the industries and what really makes the most sense as far as the business model that would work for you and your family. Initial investment. So we always talk about in the FDD, item 7 is the investment range. They're going to give you a low range and a high range. And sometimes they say an average investment. So we have franchises for people that are $100,000 all in. So that means with SBA, you can, with 10 or 20 grand down, you're in the deal. We have bigger deals where they're full-blown build-outs of huge med spas with hormone replacement, testosterone replacement, Botox, that kind of thing, where those could be a $700 to $1 million build-out. We have a lot of home service franchise models where investment ranges could be anywhere from 100 to 250, 300,000. We have retail locations where they could be 3 to 700,000. So there's a lot of different investment ranges. So when we talk about total project costs, we utilize that for SBA. And when we talk about SBA, I already said we can do anywhere from 80 to 90%. Typically on a larger build out project, you're looking at 80% of total cost for a startup. Once in a while, we can get up to 90%. In that total project cost, we're building in working capital. So you're not coming out of pocket anymore. For example, I work with one bank and they'll do 80% of total project costs. We'll build in working capital in that loan amount. They'll also give you an additional line of credit up to $100,000. We want you to be well capitalized because when you're starting a franchise, you got a marketing of, the first few months you're not going to be making cash flow per se. Now, some business models, like with health and wellness, they have some of their goals is to have a membership built before you open your doors. So these are things you're going to want to know what the ramp up is as you're exploring franchises. So we have a questionnaire we take you through because we really want to pinpoint what your risk tolerances are. There's also different franchise models. There's some that are starting out. They might only have 3 or 5 locations. There's other more established franchise brands that have 3 to 500 locations. So you might feel more comfortable in a brand that's been really established. Or maybe you say, no, I like this new brand because there's a lot of territory. There's a lot of open space. I can secure the flag in key markets. So these are conversations you'll have as you're going. And I think what we have here, and go ahead, if you have any questions, you can definitely put them in the Q&A. The SBA program we're talking about is the SBA 7A. You can have up to $5 million in SBA financing aggregate. So you can have multiple SBA loans. So let's just say you started a HVAC company and the total startup cost was $250. You could operate multiple locations and open up more locations until you hit that $5 million aggregate. So there's a lot of runway. And there's also other ways of financing franchises. So the point is that there's the SBA 7A. Let's just say you wanted to buy, part of your strategy was to buy the real estate. You wanted to start this HVAC company, but you also wanted to own the real estate. Well, we can use an SBA 504. We could do deals up at as high as $18 or $19 million with the SBA 504. So there's a lot of flexibility. Now, when there's no collateral, it's just not a real estate deal. It's just a franchise or business acquisition. It's a 10-year term, and it's based on the Wall Street Journal Prime, which is currently at 8.5% plus a margin. Margins depend on the banks. They differ. The highest margin typically is 2.75 on an SBA loan. So it's going to be anywhere from 1 to 2.75, depending on the institution that funds the deal. Most banks are in the 2 to 2.75 range on franchise startups. I do have banks that do have margins as low as 1%. Usually on a franchise startup, they want you to come in with a little bit more down payment. So it's just going to vary. SBA doesn't make the loans, they just guarantee a portion. And the banks kind of overlay based on their risk level on what they're willing to do. There's no prepayment penalty because it's a 10-year term. If there's real estate involved and the term is greater than 15 years, there is a 3-year prepay. But on just the franchise stuff, you're not going to have a prepay, so you can pay it off whenever you want. They're usually variable rate loans, so that it's going to adjust with Wall Street Journal Prime. Prime's at 8.5, like I said. 2.5 years ago, it was at 4.5. So rates have gone up a lot. I would imagine that they would start coming down at some point. There's also some fixed rate options that you can get on the 7A financing. Most of the lenders offer variable rates, but there are banks that will do um, fixed rate options. Maybe not for the full 10 years. Some of them do 3-year fixed, some of them do 5-year fixed. 504, it's a first and second loan. It's only really going to be applicable to you if you're doing some kind of commercial real estate, self-storage. You're buying a building for your franchise, something like that. 504 has a longer prepayment penalty. It's 2 underwriting processes, but it's a great product for certain use cases. And like I said before, if it was $1 million real estate, it would just say you're buying a self-storage $1 million. The bank would make a 50% loan, so you'd have a $500,000 first, a $400,000 second, which is the SBA guaranteed piece, and then you would come in with 10% equity injection. On a startup business, they give you a 5% haircut, and if it's a special purpose building, they would give you a 5% haircut. Other than that, they could do up to 90% financing. But this is just for real estate type of deals. So sometimes I can do a 504 with a 7A. I have a gentleman right now buying a Italian restaurant startup franchise. He's buying a building. He's renovating the building. He's adding 2 stories, and the total cost is like $6.3 million, and we're doing 504 for him for that deal. So there's something for everybody with an SBA. If you're in a rural area with a population less than 50,000, there's also another government guaranteed program called USDA. We use that sometimes, USDA B&I. Pros and cons. Really, if we're talking about franchise without real estate, you're just going to use the 7A, so I don't need to get into that with you, I think, on this call. We do a lot of workshops on SBA too. So kind of circling back, I don't know if I've given you my background, which I usually have a slide that does. My name is Bo Eckstein. I've been in lending and business for 26 years. The last 7 years, I really focused on SBA. Through my SBA lending, I work with banks, credit unions, non-banks. I really specialize in being able to structure really deals that most won't do. I get really creative. I know which banks have the appetites for certain projects. And through my SBA lending, people would always come to me and they would tell me they would say, "Hey, can you help me finance this franchise?" So I started asking them the questions. Well, why this franchise? And, well, I like the pretzels. I like Annie Ann's pretzels or whatever. And then I figured out there was a whole world, called franchise consultants. So I actually online, I got trained, and I'm a part of a group called FBA, which is Franchise Brokers Association. So I have both companies that I help people. Really, my passion is to help as many people own businesses as possible over the next 20, 30, 40 years. And I always use my brother for example. My brother is a very high paid W-2 guy. He works in financial services, extremely smart, but he never puts his entrepreneur cap on. He's like kind of corporate world. And I'm always telling him, Damien, you should look at doing these different strategies, because I've always been an entrepreneur. And so, here's a guy that's paying 250, 300 grand a year in taxes. And if he just owned a small business or even got into some strategic real estate, there's ways to offset that W-2, and he just doesn't get it. And I don't know what else to tell him. And he's a really good saver, really good investor, but he's missing the other, like it's a triangle, right? It's how much money are you making? What do you have in passive income, and what's your tax advantages? And he just doesn't have the tax advantage. So I always tell people, look, like we got to start building a baseline of passive income or semi-passive income. And how can we do that? We got to own real estate. We got to own businesses. I mean, that's where all the wealth is created, by owning like those two, those two food groups. I think the other big thing now in today's generation is, software companies, because you create the software once and you license it and you have subscriptions. That's another great business model. I mean, those are really the business models that really make the most money. It's a shame that we have people making 100, 200 grand a year that are barely getting by if they're in a high cost living area. So that's really my passion, is just to be a resource for people. I'm well connected with different CPAs and 1031 exchange companies, understanding, people buying real estate utilizing cost segregation, understanding, high level from like what you can write off, what you can't write off. This is so important for all of us to learn. And so over the years, that's what I've been passionate about doing. I started my career in residential home lending, and then I got into commercial lending. They got into SBA, and now all I really do is SBA financing and work in the franchise space. And there's also, I didn't bring this up yet, there's also franchise resales. So, we have lists of people that are selling their existing franchises. Whether a franchise is right for you or not, there's also business acquisition. There's people going out. There's all these baby boomers that don't have succession plans and they own these small businesses. Well, whether it's a franchise or not, you can utilize SBA financing. You can get really creative on seller carryback. We've closed deals with like no money out of pocket of the buyer because they brought in an investor partner. You can be extremely creative. And some of you have a lot of cash and you're looking to do something with it to make it to protect your capital and also to get a better return. So take into account all the things I'm talking about. And then when we're discussing these items, we can really figure out, is it more of a tax play for you? Or maybe you want to set up your son or daughter because they're going to be graduating, or maybe they're in high school, or maybe they're graduating university, and you really want them to become entrepreneurs and you can do it together. We see that. I have one client right now, and he sent me his W-2, and he paid $1 million last year in taxes on his W-2. And it's like this year he's going out and he's buying 2 different franchise brands. So there's a lot of different use cases for anybody out there. I think there's tremendous opportunities. I think we need to really do our homework looking at these franchises. And that's why people work with franchise consultants like us, because we help them. We don't charge them anything. It's really success-based. The franchisors, they pay us out of their marketing budget because they know we can bring them qualified candidates. And we don't just, a lot of people go on to like websites like Biz Buy Sell, and it gets overwhelming. So I think the way we do it, I don't think I know the way we do it is more of a way to systematically find a franchise business model that would make the most sense for you. And there's a lot of discovery that goes along with that. And some people make decisions quickly. Some people take months. We've even had people take a year before they figure it out. And some people, quite frankly, they just realize it's not right for them, and that's perfectly fine. Really, the quicker we get a yes or no is fine with us. It's really, we just want to educate the masses on the value of owning a business. This is for business acquisition. We talk about seller carryback. You can do that. I'll give you a little bit of flavor, and I want to get back to the franchising stuff. So you find a business that's been established for 20 years. The guy wants to retire, guy or girl. They want $900,000 for it. For the business. Anytime we're underwriting a business acquisition, we're always collecting the seller's tax returns for the business because we underwrite off the tax returns. So it's $900,000 for the purchase price. We need some working capital. So the total project cost is $1 million. We have $50,000 of working capital, a few months of employee salary, and some closing cost fees. So it's $1 million total project cost. So that means on a 7A loan, you're going to get $900,000 loan. Well, you got to come in with $100,000. Well, you can ask the seller to do a seller carryback with up to 7.5%. So in theory, they can carry back $75,000 on full standby, which means there's no payments for the first 2 years. It can still accrue interest. And then instead of you coming in with 10%, you only have to come in with 2.5%. So you just closed $1 million purchase for $25,000 out of pocket. Now, some of the qualifications: good credit scores, ideally 680 or higher. Global cash flow good. You shouldn't have a bunch of debts that you can't debt service without your outside income. So they look at what do we call global cash flow. most banks typically want to see you own a business within the 2.5 hour radius of where you reside. We can get around that sometimes, but not all banks. About 80% of banks say, yeah, we want you in the market. I do have banks that will lend in different states. So just really depends. It's just with a franchise model, you don't need experience, meaning like you could be a doctor or a nurse and you could go and invest into a HVAC company. And even though you don't have experience in that business model, because it's a franchise system, it's fundable. So that is a beautiful thing. And most franchise systems, you don't need experience in that particular skill set. So a lot of people going into this HVAC business, they don't have a home service or a HVAC background. So franchise systems are designed to help marketing, hiring, business structure, all the systems and processes. That's why you invest in a franchise. Some people can start a business, of course, but sometimes it's better not to recreate the wheel and just get a proven business model. And so that's why a lot of people from the corporate go into franchising. Even established entrepreneurs you're seeing now invest more into franchises because they're just diversifying their portfolio. They're getting a good operator in the system. So you don't necessarily need experience in that sector. And also mark your calendars. June 29th, we're doing a business ownership summit. And we're going to do speed rounds with with franchisors. They're going to present their brands. That's June 29th. You can go to businessownershipsummit.com and sign up if you'd like to. So this brand is called 1 Hour Heating and Air Conditioning. It's an HVAC company. They have a semi-absentee business model. I'm going to show you this quick video because I think it'll be eye-opening. Just what's available. Not to say HVAC is the right business for everybody, but we have lots of business models, and we want to share these different business models with you. Part of what we do once we do our diligence, when we're doing our diligence with you, is we're going to show you ideas that we think best fit with what you're looking to do from a business standpoint. So here we go.
1 Hour is the market leader, the #1 residential HVAC company in the country. We have been franchising now for 20 years and currently have 375 locations across the country. And the vast majority of the individuals that I work with are entrepreneurs. They are not from within this industry. They like 1 Hour because it is an essential service. They like the high return on investment, the relatively short ramp-up period. Last year I had 31 new locations, 27 were entrepreneurs. I had a NASCAR pilot, someone in med school, several attorneys, IT backgrounds, finance, engineers. Again, none of them were looking to set this up in order to get inside the vehicle. And I support both owner-operator as well as semi-absentee. And the appropriate budget for owner-operator for their first territory is $150,000. That would include their initial franchise fees, 2 vehicles, 2 field technicians, leasing out about 1,000 square feet of warehouse space, ample funds for marketing, as well as $50,000 in working capital for their 120-day onboarding ramp-up period. And if they elect to pursue this semi-absentee, they need an additional $85,000 to secure a solid lead tech to be the face of the business, so totaling $235,000. Our FDD is extremely strong. The item 19, last year our #1 location did over $48 million in revenue. System-wide, average revenue per owner was $4.9 million. There's 3 revenue streams for 1 Hour. The first is a recurring revenue stream, which is great for any business owner. You have money coming in automatically every month. We do it with our service contracts, and they're called Comfort Club. We do very well with them. We have a 33% initial subscription rate. 85% of those members renew annually. And as far as revenue, it's also very strong. I have owners all across the country with 14 and 15,000 homeowners in their respective territories sending in monthly subscriptions, and $1 million or a little more than $1 million of their total revenue is attributed back to just the Comfort Club. And then we also provide service and repair work, as well as replacements and installations. And we provide our owners with everything that they need to know and have in order to be successful. We're very good at recruitment. Again, most of the people I work with are not from the industry. I have not had one location that hasn't had their team recruited, trained up, and ready to go at the end of their 120 days of onboarding. We take care of all their marketing for them. They will not have to look for customers. We manage social media, the webpage, Google ads, etc., all on their behalf. Again, a background in this industry is not a key attribute for success. Key attributes for success include the ability and desire to follow the system, which has already been successfully replicated hundreds of times across the country. Another key attribute would be that this business, for an owner, what it really is about is building a team, creating a culture, having all of your technicians aligned towards the same common goal. Because, in our model, what our owners really are providing their technicians with is the opportunity to run their own business within a vehicle that we provide for them. Our technicians transition over to what we call profit sharing, which is really just a commission-based comp structure. So our technicians think like owners. Our purchasing power is $1.5 billion strong, and we have preferred pricing in place for anything that they would need to buy in order to run their business. We conduct an analysis, for all of our owners on a regular basis to make sure that they're taking full advantage of everything. We just had an owner in Texas have one completed. He did $8 million last year in revenue. He saved $600,000. He was $600,000 more profitable buying everything that he needed in order to run this business. And this brand validates extremely well. I have a brand new owner out in San Diego. He's already on the other line making validation calls. He opened in July, 2 vehicles, 2 technicians. He's already up to 5 technicians and looking to add an additional territory. And again, he's not from this industry. He signed his agreements in February, went to initial training in February, and started interviewing technicians first week back in March. So
that was just like an example of a franchise model. Now, HVAC has its pros and cons. Really, what we want to do is we want to have you go through the steps so we can use the tools we have and the resources to really match you with some brands that would make the most sense. Because some people just wouldn't be cut out for HVAC business. But that was just an example. That as a semi-absentee model, you get a face of the business. You cake in your total project costs the salary of the manager and the total project costs. You fund that with the loan. So that's a home service franchise model. As he was talking about growing it, it's adding a tech, adding a truck. But there's a lot of other types of businesses. So guys, if you're interested in having an initial discovery call with me, I'm going to send an email. If you're interested in taking the entrepreneurial assessment, it takes about 10 minutes. It's nothing personal. We have 2 little steps to do, and then book a discovery call if you're interested in exploring franchises. Like I said, it doesn't cost you anything. I'm here to help. I'm here to be a resource. I'm here to introduce you to guys like Michael, who I think will bring a lot of value to what you're doing, especially if you're trying to grow your wealth and minimize your tax consequences. I hope I opened your mind to some opportunities. And I look forward to seeing you on other events. I'm going to send out a recap email so you have Michael's contact and information on working with me and getting started in the journey of looking at franchise business models. And I can also help you if you're just looking to buy an existing business, or maybe you're looking to buy a medical practice, or maybe you're looking to buy a building and do a rent replacement deal and get 100% financing with SBA. I can help you navigate all that and more. I just want to be a resource for you. So I appreciate you guys sticking with me. Appreciate the feedback and comments, and we'll see you soon. Hi guys, Bo Exie here. If you want to visit myterritorycheck.com to find out if the franchise we spoke about on the show, or maybe it's one you've investigated and you're trying to see if it's available in your market, you simply go to myterritorycheck.com and we'll do a quick search for you. You enter in your name, email, zip code, and we'll get back to you as soon as possible if that particular franchise is available. We'll also send other franchises similar to that if it's not available, so you can figure out what is available in your marketplace as you're diving into different franchise models. So go to myterritorychef.com and we'll help you out as quickly as possible. See you soon. Hey guys, Bo Exian here. If you enjoyed what you saw, please subscribe to this channel. We talk all things financing. I've been in the lending industry for over 20 years, and I'm happy to answer your questions and provide great content.